Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down into bite-sized pieces. Today, we've got a lot of stuff to go over, but it's all fascinating, all good stuff. First up, did you know that you are early to Bitcoin and the greater cryptocurrency and digital asset market? And we're going to take a look at a couple of graphs and images, which is going to prove this point also. Billionaire Hedge Fund Manager Tudor Jones buys Bitcoin as a hedge, and he pretty much just lays it out for everybody as to why they need to get into it now. Also, this to me is actually the biggest story. This is a report that was put out by Messari, and it lays out most critical aspects of the Bitcoin halving, and as far as what's going to happen right before, during, and right after. And it's going to go over a lot of different price points, what's going to happen with the miners, and what's going to happen with retail and hedge fund managers in general. It's a really good, really detailed report, and we're going to break it down in little bite-sized chunks. And finally, UFC is jumping into the cryptocurrency game, and we'll talk about that last. But let's get into what's going on with the market right now today. So if you're not aware, there's a Bitcoin halving coming up. I don't know if that's a big deal, but I think it is. This is going to happen on May 12th, so we're just 2 or 3 days away. Looks like right now we've got Bitcoin price. It actually jumped above 10,000. Let's hit the refresh, and it's come down below 10K again. But the big question is if it's going to go over 10K again. I guarantee it will. I mean, I can't guarantee anything, but I'm pretty sure. The real question is, what's going to happen after the actual halving event, which occurs on May 12th? Will there be an amazing dump, or will it just keep going on to infinity? And I think that question is going to be answered in some way, shape, or form when we go over all these different articles today. So let's jump in. So I wanted to include this because it gives us a sense of where we are now and where we are headed to. Now look, you are, if you don't realize it right now, you are really early to cryptocurrency and digital assets. This is like getting in when the internet was first getting going. I know some people will disagree with me. They'll say, no, everybody knows about it. But do they? If you walk to anybody on the street and say, do you know Bitcoin? Chances are a good number will. Then if you ask them, do you know about Ethereum? Do you know about XRP? Do you know about Chainlink? Do you know about anything else besides Bitcoin? They'll have no idea. And if you ask them, do you know what Bitcoin does? Do you know how it compares to gold? Do you know what's happening in the price action? They have no clue. So all these things right now, as you have to understand, is we are super early, and the early adopters usually reap all the rewards. Well, this is Dan Hedl, or as he's known as Dan Held, and he is the business director of Krakken. And he just laid out this tweet. He said, hey, if you're reading this right now, you're early to Bitcoin. And Raphael Schultzkraft, founder and analyst at the crypto data firm Glassnode, is backing up his claims. And he pretty much just lays it out with this little graph right here. This right here is the relative Bitcoin market size. And usually these little squares will be about 100 billion. Well, there's Bitcoin right in this little tiny area here. Here's gold. Here's the Federal Reserve balance sheet. Here's the global currency supply. And to make this even better, or even more so, if you haven't seen this before, this is the graph I always like to pinpoint to, and it takes a look at what is all the currency throughout the whole global economy. So if you can take a look at this little square right here is 100 billion. Here's silver. Here's all cryptocurrency, right? This was actually a year or so ago, so it's grown a little bit. But I can tell you this, Berkshire Hathaway, Microsoft, Alphabet, Apple, they've all grown too. Here's the 50 richest people, and they've all got a big chunk of that. California's GDP, the Fed's balance sheet, 3.5 trillion, which is going up massively as we know. Here's the currency. Here's gold at 7.7 trillion. So if you don't think that Bitcoin will break into gold's market cap, I see it as at least 25%. I see it as 2 trillion easily, but I could be wrong. That's just gold. Now we take a look at stock markets. Here's another $73 trillion. Global money supply, 36.8 trillion. Broad money, which includes coins, banknotes, money market accounts, as well as saving, checking, and time deposit. That's just a little measly 90 trillion. Here's global debt, which is going to go up massively at 215 trillion. And here's real estate, 217 trillion. Here's the derivatives. And this is quadrillions. So if you don't realize it, you're super early, and here's Bitcoin. So when we talk about these things, just realize that there's a lot of room for growth, and you're in the right place at the right time. Let's move on. So next up, Billionaire Tudor Jones buys Bitcoin as a hedge. So this guy, Mr. Jones here, is a large hedge fund manager and founder of Tudor Investment Corporation. He says he is buying Bitcoin. So I was looking at this and I was like, who is this guy? I've heard of him before, but I want to know exactly who he is. So Tudor Jones is an American hedge fund manager, conservationist, and philanthropist. In 1980, he founded his hedge fund, Tudor Investment Corp., asset management firm headquartered in Stamford, Connecticut. 8 years later, he founded Robinhood Foundation, and he has 21 billion assets under management, and he is most famously known for the stock market crash of 1987 and betting against it and making a ton of money. So, good for that guy. So anyhow, he is going to be investing into Bitcoin, and he states the best profit maximizing strategy is to own the fastest horse, says Jones in a letter to his investors. If I am forced to forecast, my bet is it will be Bitcoin. So right now, I can hear everybody screaming at the screen going, Bitcoin's not the fastest, it's not the fastest, XRP and Digibyte and blah, blah. I don't think that's what he's talking about as far as transactions per second. I think what he means here is that it is the fastest horse to mass adoption, and it is in the public consciousness. So that's why he's saying, hey, I will probably invest into this, and this is why. He says his 22 billion Tudor BVI fund may hold as much as low single digits of its assets in Bitcoin futures. And I was like, that's a lot of money. That's a big investment to go from probably, let's be honest. He didn't go from 0 to 100 just like that. This guy's probably been investing in the background before. But to say it to all of his investors and go, look, we're going to put as much as low single digits into Bitcoin, what is that going to do? It's going to have a ripple effect, not just through his investors, but as we're going to see in a little bit, it's going to have a ripple effect for everybody in traditional markets and hedge fund managers. However, I will say this. He is not the only hedge fund manager in the game as far as getting into cryptocurrency digital assets. If we just take very quickly look at the digital asset investment report from Grayscale. This is Q1 2020. It's one I always reference. They have 2.2 billion assets under management, and in their first quarter of this year, 88% of investments came from institutional investors, dominated by hedge funds. Last year, guess how much it was? 79%, dominated by hedge funds and institutional investors. So to say that he's the only guy that gets into it is disingenuous. However, he is a big name. So when we see big names coming out and going, yeah, I'm going to do this, and they're not in the shadows, it's big. It's big, and I like it for mass adoption. So let's take a look at how this will have a ripple effect. So this was CNBC television, and they pretty much just did a whole segment. I broke it down to the most important parts. This gentleman here, pretty smart guy. The problem is that due to the coronavirus, most of these commentators, they're at home, and they have bad audio. Now, this guy has the ultimate worst audio of all time, so I'll try to fix this in post, but just so you know, the audio is going to suck. So let's take a listen of what he's talking about here.
Look at the volatility of Bitcoin, where it's gone and where it could go. A 5 or 10x in Bitcoin would not be inconceivable in this environment.
Brian, big fan of your work. A lot of people think the gold Bitcoin is binary. You have to own one or the other. They both can't work. Do you think in this environment both can do well?
Sure, it's the same thesis. It's the idea that you have, you need a capped security or a capped supply. And so whether it's gold or whether it's Bitcoin, I happen to think Bitcoin has a much higher upside, a better risk to reward, but the thesis is very similar. The only other thing I would say about Bitcoin is that's different than gold, it's a lot more mobile, right? We've seen the issues we've had over the last weeks where gold prices disengaged from futures, spot gold, because they couldn't get gold bars from London to New York to settle. You don't have that issue with Bitcoin. This is internet money. You just send it right over and settle it. So in that sense, I think Bitcoin has a bigger role to play in this environment than gold does.
So yeah, so now we're going to get into this whole thing about, well, the halving's coming up, and we got Tudor, and there's different institutional investors, and before you know it, everybody's now is going to be the genius on Bitcoin. They're like, oh, I knew about this a long time ago, and I've been investing in whatever else. Look, I don't care when you come to the party. As long as you're here, I'm pretty happy. Great. So we've got this little statement here. The next part, they're going to get into the Tudor Jones. And when I heard this, one thing came into my mind, which was these people, they have no guts. They have no bravery. They are just pretty much lemmings, and they kind of follow the pack. And it was kind of discouraging to me to hear about it, but it did make me realize one thing, and that is that me and you who are watching this video right now, we are the ones that take the chances. We're the ones that have the guts and go, you know what, I'm going to invest in this. I believe in it. I know it's going to do well, and I'm going to, follow it through. So all the time when you've talked about this to your friends and family, significant others, and they're like, that makes no sense. Well, now everything's coming to fruition. So congratulations for all your hard work. These are the fruits of your labor. Let's take a listen to this ripple effect.
Karen, I'm curious, when somebody like a Paul Tudor Jones says that he's buying cryptocurrency, do you think that sort of paves the way for other hedge fund managers in the mainstream to do the same?
Yeah, I think so. I mean, it does. It's sort of, nobody wants to get sort of outed having owned Bitcoin if it completely falls apart, but if you can say, Paul Tudor Jones owned it also, maybe that gives you a little bit of cover. I think that Mike Novogratz had said it a few weeks ago. I really believe if this isn't the environment for Bitcoin to work, with this kind of just money printing all around the world, then I don't know what is. So we'll see if inflation ever ticks up. I'm optimistic that Bitcoin will go up as well.
And that's it. And you know what? When I hear it again, it's just amazing to me. She says, well, yeah, if Paul Tudor Jones says it's okay, then everybody else is like, it's okay. Now, I do get it. Some of these hedge fund managers, they have pressure from their bosses and their bosses' bosses because they don't want to get caught short. They don't want to lose their job because they, told their clients to invest into something that is, super or could be considered volatile, even though I don't think it's as volatile as people believe it to be. But you know what? If you take no risk, you'll get no gain. And just like Michael Jordan said, I've missed 100% of the shots I never take. So I think it's a good thing that you took that risk. So moving forward, I do believe we're going to hear more people talk about Bitcoin and the cryptocurrency digital asset market. They're going to talk about how they believe it's now legitimized. They believe they're going to start to talk about how it's going to exponentially grow, and it's a new market class or asset class. And everybody's going to be the biggest cheerleader moving forward. So this is the time to be involved. Let's move on. Now we're going to move on to the Messari report. And this kind of took another piece of narrative, which is going to fit into the whole Bitcoin complex and how great it is. So the title is Bitcoin Halving Will Possibly Change the Class of Investors in the Current Market. It was pretty interesting stuff. So less than a week ago, Messari's recent report on Bitcoin halving analyzed some of the lesser known factors. A lot has been spoken about Bitcoin's idolization with gold. However, the main aspect that would possibly solidify the gold narrative is the drop in Bitcoin's inflation rate. That's key. At the moment, the Federal Reserve's inflation rate is at 2%. 2%. And after the halving, Bitcoin's inflation will be below the Fed's for the first time in history. And that's amazing. That is just one more thing that can be said about Bitcoin and digital assets in general, I guess, just how great these things are. And when I always talk about it, I always say double D's, triple S, and it moves, which means it's decentralized, it's divisible, it's smart, it's scarce, it's safe, and you can move it. So when I'm talking about it, when I try to tell people, I'm like, just remember those two things. It's decentralized, more of an open source. It is divisible. You can divide it. You don't have to melt it down like gold. It's smart. You can program it. It's scarce or finite. There's only going to be 21 million out there. It's safe. It's unhackable. It's been around for 10 years and no one's been able to hack it. And you can move it. You can move it around pretty quickly and easily, a lot faster than you can cash and a lot faster than you can with gold. So if you look at all those things, this is why it is a better type of asset. So this report, let's just dive right in. So there's a lot of factors. It's 23 pages. It's pretty tightly bound, but these were the most important parts that I found. So first up, this report is written by the Messari Research team and sponsored by Bitstamp. So when you have somebody who sponsors something, usually it's going to kind of go your way that you kind of want it to. It's like the old days when they had the smoking programs or the smoking research. It was funded by Big Tobacco. Amazingly, it worked out that smoking wasn't so bad. But anyhow, the information here is pretty accurate. Now let's go over it. So first off, who wrote it? So Jack Purdy, he's a research analyst at Messari. Prior to Messari, Jack was a banking analyst at Capital One, working in the capital markets enterprise valuations group. Ryan Watkins is a research analyst at Messari. Prior to joining, he worked as an investment banking analyst at Moels and Company, where he advised on mergers and acquisitions, private placements, restructurings across all industries with a focus in technology, media, and telecommunications. So these guys are no slouches. It's not like they just pick them off the street and go, hey, write this report. So makes sense. So they frame their thesis pretty much like this, and they quote Vitalik Buterin, who wrote in Bitcoin Magazine. He stated, one of the major faults of traditional fiat currencies controlled by central banks is that the banks can print as much of the currency as they want, and we're seeing that right now. And if they print too much, the laws of supply and demand ensure that the value of the currency starts dropping quickly. Debatable. Bitcoin, on the other hand, is intended to simulate a commodity, like gold. There is only a limited amount of gold in the world, and with every gram of gold that is mined, the gold that still remains becomes harder and harder to extract. As a result of this limited supply, gold has maintained its value as an international medium of exchange and store of value for over 6,000 years. And the hope is that Bitcoin will do the same, and we are seeing that play out right now. So then talk about what is the halving, and I'm going to link this in the description. So if you have anybody who has questions about Bitcoin and whatnot, just send this to them because it's going to answer most of their questions. So this is one of the most important parts here. They talk about miner economics and how this is going to play out post-halving. So they state, the Bitcoin halving is a multifaceted event that will affect all stakeholders in Bitcoin's ecosystem, but its miners will be the most impacted. Without a 100% price increase to counteract the reduction in new issuance, every miner's revenue will be impacted significantly. So if you're unaware, what's going to happen is these miners have been working, and for every block they're able to mine, they get 12.5 Bitcoin. After May 12th, it drops to 6.25. So the same overhead, the same price, the same cost, same electricity, all that stuff, but you get half the reward. And that's a bummer. And there's different conflicting opinions here, and they're going to lay these all out in this report and explain how this could be bad or this could be awful for a Bitcoin price. Then it states, while most miners cannot immediately shut off their machines due to contractual obligations with co-location facilities and utilities, those with the highest cost to produce new Bitcoin will eventually capitulate and go bankrupt. That's something I never really thought about. If you are renting a space or you have a obligation for someone who has bankrolled your whole operation, you are contractually obligated to keep working and to try to make as much money as you can or mine as much Bitcoin as you can until everything just runs out. So there's going to still be these lagging indicators or these lagging miners just going until they just run out of money and go bankrupt. And this part was interesting because it's a note that's going to come up. If you weren't around in 2017, this isn't going to make much sense, but it's going to make a lot of sense as time moves on. And it states, as time passes, Bitcoin's transaction fees will need to rise substantially to meet current levels. Whether or not this is achieved will depend on future demand for Bitcoin block space. So what are we talking about here as far as fees? If you take a look at what happened to the average transaction fees historically, Bitcoin was a pretty cheap way to move things around. Back in the day, this is in 2012, 2011, it only cost you a couple cents. It was pretty awesome. I mean, you can move as much Bitcoin around as you wanted to. Not a big deal. But then as things started to pick up, now we got 11 cents, 5 cents, 6 cents. Not too much, not too bad. And then we got 18 cents. And then look what happened when we started to see a bunch of people get into Bitcoin and buy Bitcoin and transfer Bitcoin. Now you're looking at dollars. And then this is what happened in 2017. I remember this time, and it was amazing because it went from $2, $4, $5, $7, $13, and before you knew it, you were at like 28, 55 bucks just to send Bitcoin. Now, it depend on different factors, but it got super expensive at one point, and this was the reason for the split for Bitcoin Cash, Bitcoin Satoshi Vision, because they said it was supposed to be a medium of exchange or able to transfer around the world and not cost so much. And the price did go up pretty bad. And here we are down at normal levels. However, I see the same problem happening again. If people get into Bitcoin, they're trying to transfer it all the way around. It's just not going to happen. It's going to be too expensive. So this is a nice little chart, and we've gone over this many a time on this channel, but here was the first halving, November 20, 2012, to its all-time high. Went up almost, they say 8,400, but it was about 9,000%. And the second halving in 2016, then it went up almost 3,000% and hit $20,000. So this is just historical records, and we're hoping the same thing's going to happen over here. It's going to go all the way up here, but we'll see what happens. And they talk about stock to flow, a bull case and a bear case. But this was the interesting part, the minor selling pressure. There's a bull and a bear case. And they say the rationale behind the halving as a positive price catalyst is the reduction in selling pressures from miners, the largest natural net seller of Bitcoin. Miners have fiat denominated costs while their revenue comes in Bitcoin, so they need to constantly sell in order to service their expenses. After the halving occurs, their revenue is immediately slashed in half, meaning they only have half as many Bitcoin to sell. Currently, total potential sell pressure for miners is about 4.6 billion per year. And after the halving, this amount will be reduced to around 2.3 billion. Assuming constant buy pressure, this reduction in selling should lead to at least a marginal rise in price. So if you don't have many Bitcoin to sell, the supply is decreased. The demand should still be there and will probably increase, because when you can't get something, you want it even more. Then the price will go ballistic, just like it did in 2017. That's a theory. But there's a flip side of that same coin, and this is the bear case. And it states, minor capitulation does lead to less sell pressure on Bitcoin in the long run, which makes sense. That's why during the last Bitcoin halving in 2016, you saw a reduction in price for a little bit, and then it went parabolic. But in the short run, it is likely to increase sell pressure. Why? The reason is because about 27 to 35% of the Bitcoin miners could go offline if Bitcoin remains below 9,000 for several weeks post-halving. And this is what a lot of people are predicting. It will actually decrease in the price, and post-halving will be around 9 grand. Given that miners cannot shut off immediately, this would lead to miners operating at a loss for potentially several months until they go bankrupt. During this time, not only would they be selling all the Bitcoin that they mine, but they would also sell all the Bitcoin from their treasury, or what they have in savings, to cover the shortfalls and pay for costs associated with winding down their operation. This would put a strain on Bitcoin's price for the months following the halving. Now remember, this is where they're talking about short term. We could talk 3 months, 4 months, 5 months, something like that. But after a long period of time, you would still have a depletion of Bitcoin. The supply would go down, the demand would skyrocket, and what happens when you have not a lot, or supply is low, demand is high, price goes up. That's usually how it works. So now we're going to break into the good stuff. Now we're going to talk about why this halving is so special, what's going to happen, and how this is going to be a big boom for the entire industry. So it states, at best, the halving is a once in every 4 years marketing event where Bitcoin reminds the world of its superior properties as a monetary good. What makes this year's event so special is that Bitcoin is now a part of mainstream consciousness, and that the current macroeconomic environment is prime for Bitcoin. Fiat monetary regimes are inflating money supplies at historic rates, while Bitcoin is tightening its monetary issuance down to parity with gold. The timing couldn't be any better. And I got to tell you, it's true. Before I got in, you didn't really hear too much about Bitcoin. It wasn't all over the place. But as soon as 2017 came into play, I remember when they had a Christmas special on Saturday Night Live, and a kid sat on Santa's lap, and they said, "What do you want for Christmas?" And this kid goes, "I just want Bitcoin," and everybody starts laughing. And I remember going, "Man, that is amazing!" Just like 4 or 5 months ago, no one heard about this. Now it's all over the place. It fell out of favor because the people that I talk to say the same thing. I'll tell them Bitcoin, like, "Hey, didn't that used to be like double the price and then it dropped like, hugely?" I'm like, "Oh yeah, it did, but it's going to go up." Like, yeah. Let me know when it goes up. And that's the whole mentality of people. They think, all right, when it's going up, then let me know. I don't want to buy it when it's down here. Let me know when it's going up and I'll buy it. And I can guarantee this. Once Bitcoin goes above 20,000 and it goes higher, 21, 22, 23, 25, 30, and people start hearing about it, then it's going to be all of a sudden a game changer. Because like, oh, it came all the way back just like everybody said. And then, oh, I heard it's going to go to 100,000 or 250,000 or a million or whatever it is. And then you're going to see FOMO like crazy. I could be wrong. Let me know what you think in the comments section. That's how I see it. Now we get into the inflation rate, where we talk about this particular halving officially drops Bitcoin's monetary expansion rate below the Fed's 2% inflation target for this first time ever, and that was what we talked about in the article. And that's a big deal from a narrative standpoint. I believe the narrative reinforcement that Bitcoin is now less inflationary than the Fed is a turning point that marks Bitcoin's evolution from beta to production as bona fide digital gold. And I got to tell you right now, I mean, the timing couldn't be any more perfect. Right now, the Fed is printing money like crazy, and it's all over the news. So when you have something like Bitcoin come in and they're like, hey, this is actually rising up. Hey, there's a halving event. Oh, and guess what? It is deflationary. It is lower than the Fed's inflation target of 2%. It's lower than that, and it's only going to go lower as time goes on. So when people hear about this, they're like, this sounds pretty good. Maybe I should get into that. And then they say in this particular macro environment, that's powerful stuff. Couldn't agree more. So here's the last part, and it kind of sums it all up. Following the 2012 halving, we witnessed the expansion from the techno-libertarian crowd to the retail-libertarian crowd. So techno to retail libertarian crowd, as Coinbase and Mt. Gox catapulted to prominence and mining professionalized. Following 2016 halving, we witnessed the expansion of crypto's audience from the retail libertarian crowd to just a general retail crowd, and that was pretty much what I was involved in. The last boom blessed the industry with a glut of capital to build the infrastructure needed for the next super cycle, which is what we are on right now. And now this infrastructure is just sitting there waiting for these new customers who can infuse 100x more liquidity into the system than exists today. And I could not agree more. So if we had 100x, where would we be? I'm not good with math, so put that in the comment section, but it's a lot of money. All right, let's move on. So last up, UFC gets into the cryptocurrency game with a digital asset called CHILLIZ. So this is the article. Binance-backed CHILLIZ partners with UFC to bring cryptocurrency to global audience. Couldn't be better timing because the UFC fight is this Saturday. I believe that is the 9th of May. I'll probably be watching it because there's nothing else to do. So it states, UFC, the world's premier mixed martial arts organization and fintech company, CHILLIZ have announced an exclusive global partnership to introduce crypto to the masses. The crypto asset is designed to power a voting platform that allows fans to have direct input on the direction of their favorite sports organization. UFC says it will utilize the token to allow its fans to vote in club-designated polls and earn once-in-a-lifetime experiences. So another one of these different types of polls and customer appreciation type of points and whatever else. So that's cool. I mean, hey, it puts it more into the public consciousness, and we're just going to see this more and more. So we have it in, let's take a look at their website actually. So here's CHILLIZ, blockchain fintech. They're big into soccer, or as they call them, Europe football, and it's a voting platform. It's a currency that fuels blockchain-backed platforms and products geared towards casual mainstream consumers, beginning with socios.com. And my biggest question was, well, how much is it? Because that's what I want to know. So let's take a look. CHILLIZ is, I think it's ranked 99 or 98. Ranked 98. And it's about a penny. So if you're into that type of thing, buying something right as it's taken off, maybe this might be a good opportunity for you. Can't tell you what to do, but sure, why not? So CHILLIZ is going to partner up with UFC. Fantastic. And this also leads me to my next point about, I saw this on Twitter. This is from Eddie Alvarez, another UFC fighter. This was a couple days ago. No, yesterday. He says, all right, Ben Askren, I finally jumped in. Ben Askren is another UFC fighter. I finally jumped in and grabbed one Bitcoin. I can't send the silence any longer. You got me. Still have no clue what it's all about, but you might have to coach me with this. And perfect, right? Guy doesn't know anything about it, but he's like, I should buy it. Sometimes that actually works out for you. Good for that guy. And then what was interesting to me was I was reading all these different comments. And you got Pompliano, Alex Cobb, he's got a YouTube channel. And of course, he's going to tell him about XRP, which is pretty funny. Dan Held, which we just talked about from Krakken. That's pretty good. And then Carl, one of us. And then Richard Hart from Hex, welcome to the party. So, and then Michael Novogratz, welcome to the home team. So it's amazing, like, it's a pretty good community. You got the big guys coming out going, hey, welcome. We would love to have you. So look, that's it for today's video. I know it was a little bit long, but I see big things ahead, and we're only going to hear more about it. So when your family and friends come up to you and they're like, hey, what's up with this Bitcoin? Remember, treat them nice because they don't know. All right, thanks again, and I'll see you on the next one.